There are times in the market when a single stock behaves so violently, so irrationally, and so completely out of alignment with its own financial reality that investors feel as if they are watching a fault line tear open beneath their feet. A moment when price movements stop feeling like simple fluctuations and start feeling like coded messages, signals that something larger and more opaque is operating behind the scenes. Over the past year, that moment has centered around Rigetti Computing. This is an American quantum hardware company founded in 2013 in California, small in revenue but operating at the frontier of physics. And yet, nothing about its fundamentals explains what followed. The stock erupted from the $2 range to above $50, a jump of roughly 700% before losing more than half of its value. Anyone familiar with early-stage deep tech knows this is not normal. Under ordinary market behavior, firms with modest revenue and heavy research spending move gradually because their commercial adoption curves are slow, predictable, and tied to customer traction. Rigetti defied that pattern completely, gaining a valuation of several $billion despite declining revenue and widening losses. That imbalance is the first sign that the story is more complex than it appears. To understand this, we must examine what Rigetti actually built. Most quantum startups specialize in only one layer of the quantum stack. Rigetti did the opposite. It developed a full-stack superconducting quantum system, designing its own qubits, fabricating them internally in Fremont, creating cryogenic control electronics, writing firmware, and exposing its machines through cloud access. Such vertical integration normally belongs to large, well-funded firms because maintaining a fabrication line, cryogenic infrastructure, and control systems is extremely expensive. Seeing a relatively small company pursue such an approach is highly unusual, and the fact that it achieved fast progress makes the situation even more intriguing. By 2024 and 2025, Rigetti introduced the Anka-3 system, an 84-qubit processor reaching about 99.5% median 2-qubit gate fidelity. In quantum computing, 2-qubit operations are crucial because they form the entangling logic that makes quantum computation meaningful. Achieving this level of precision without IBM-scale budgets or Google-scale staffing was unexpected. Rigetti also unveiled a modular 36-qubit system using 4 chiplets, which cut error rates nearly in half. AWS Braket integrated Rigetti hardware in early 2025, giving the company international visibility. Under a typical scenario, these wins would lift valuations slowly and sustainably. But Rigetti's revenue did not follow suit. Annual revenue fell from roughly $12 million to around $11 million. In Q3 2025, the company brought in about $2 million, but posted a GAAP loss near $200 million. Even after removing non-cash adjustments tied to warrants, operating losses still exceeded $10 million. Normally, these fundamentals put pressure on valuation. Instead, Rigetti surged. That forms the first major mystery, how shrinking revenue and rising losses translated into soaring valuation. The next clue appears in federal involvement. On September 18, 2025, Rigetti secured a multi-year Air Force Research Laboratory contract worth about $6 million to develop superconducting optical quantum networking nodes with QFOX. Shortly after, reports surfaced that the Department of Commerce was exploring equity-based support structures for domestic quantum hardware. Federal equity involvement is extremely rare. Normally, the government issues grants or contracts, not ownership. When the government considers equity, it typically signals that a technology is viewed as strategically essential, meaning quantum hardware may now sit in a category normally reserved for defense-critical computing fields. That is a major deviation from standard federal behavior and hints that quantum capability may be more strategically urgent than public disclosures indicate. But the strangest anomaly is the cash. Rigetti accumulated more than $550 million by the end of September 2025 and over $600 million by early November, despite generating only about $11 million in annual revenue. Early-stage deep tech hardware firms rarely hold more than a few tens of millions in liquidity because their capital cycles are constrained by slow commercial adoption and high burn. Rigetti's enormous liquidity suggests capital flows that cannot be fully explained by ordinary fundraising or revenue. This raises the second major mystery: why a company with so little commercial traction accumulated a mid-cap level cash reserve. Then came the price behavior. After major announcements, a stock typically reprices in an orderly manner with volatility grounded in fundamentals. Rigetti instead detonated upward, then collapsed abruptly. Short interest rose above 13%. Technical indicators weakened sharply. The stock sat below all major exponential moving averages, including the 8-day, 20-day, 50-day, and 100-day lines. It drifted around $23 with support near $21 and resistance between $24 and $27, a pattern associated with structural uncertainty rather than standard corrections. Under usual circumstances, analysts downgrade in such conditions. Instead, many maintained buy ratings with targets around $25 and some projecting targets near $40. This contradiction forms the third mystery: why analysts remained optimistic while the chart, revenue, and losses pointed downward. Several interpretations exist. Analysts may be holding to long-term quantum expectations. They may view Rigetti's $600 million liquidity as a survival advantage in a sector where most competitors will run out of capital before reaching utility, or they may interpret government posture as a signal that domestic superconducting hardware is entering a protected strategic phase. Each of these explanations suggests that Rigetti is behaving less like a commercial startup and more like a geopolitical asset. And that shift matters because it reshapes how investors must read the narrative. The valuation, cash, government engagement, and the violent price swings are not independent events. They may be interconnected signals pointing toward a technology crossing from research into strategic relevance. For short-term traders, the key levels are straightforward. Around $23, the stock trades in a narrow band. A breakdown below $21 could trigger accelerated selling. A move above $27 could open a path toward the low 30s. The volatility means risk control is critical. For medium-term investors, confirmation comes if Rigetti reclaims the $27 region and holds above it, a sign that momentum and narrative may finally be aligning. For long-term investors, the entire thesis rests on whether superconducting quantum computing becomes practically useful within the next several years. If quantum utility emerges sooner than expected, Rigetti's liquidity and full-stack approach could position it among the only pure-play survivors. If the timeline stretches too far, valuation could drift downward until matched with current revenue. And before we wrap, if you are following this story and you have tickers you want us to cover, listed stocks, unlisted stocks, pre-IPO names, or even coins, drop them in the comments. We really want your suggestions because this channel thrives on what the community brings forward. And to every one of you who watches, subscribes, likes, comments, and shares these episodes outside the platform, we appreciate it deeply. We will keep bringing you stronger, more detailed investigative content. This was ValueStir.